Welcome back here with Business Lunch on CNBC TV 18, and here is another big exclusive. Shireen caught up with Morgan Stanley's Ruchir Sharma, and she began by asking him about the implications of Brexit and what it means for the global economy.
What's really going on here is that this is a world badly disrupted by what happened in the 2008-2009 financial crisis. And there are a few trends which have been playing out since then. And Brexit is really the big manifestation, I think, of those trends. What are these trends? One, that we're seeing a global revolt against leaders everywhere in the world. And so, it's very popular to talk about the fact that Brexit is just about leave or remain in UK. But I think there's a bigger political picture here, which is the fact that there's a revolt against the establishment taking place across the world in many countries.
This in the context of the recent developments now, do you believe that the possibility of a global recession is higher today on the back of the Brexit?
Well, I'd say marginally yes, because my own sort of thing has been that recessions follow expansions just like nights follow day.
Yes.
So once every 8 years or so, we tend to have a recession. So we should not be that surprised to get a recession. But I'm not that sort of convinced that what's happened in UK and the contagion of that for the rest of the European Union may cause a recession, partly because these economies haven't come to matter that much for global growth. Because they've been growing so slowly, they haven't contributed that much to global growth. So any changes in their economic growth rates don't have such a large impact. As you know, my bigger concern over the last 12 months has been China,
yes.
Which is the fact, and this is very important, because even if you look at the Indian market, the sensitivity to what happens in China today is much greater than, let's say, the sensitivity to what happens, let's say, with Brexit. When China was in a free fall in the late summer last year, or then again earlier this year, the Indian market and had a much stronger negative reaction compared to what has taken place in the first few days after Brexit.
So since we're talking about the markets, Richard, let me ask you about what the outlook is in the context of the recent developments, specifically as far as India, because there is one camp that believes that we're largely insulated, that the story for India is looking good. We're an island of prosperity, if I could call it that, or an oasis in the desert, as somebody else on the channel pointed out. But how would you look at India in terms of valuations, in terms of the macro stability, and what that then bodes as far as the markets are concerned?
Yeah, this is favorite sort of sell-side trope of looking at valuations. One thing which I'm convinced about is that valuations just don't tell you anything about how a market's going to do. We have looked at it across the emerging market universe, and the valuation of one country versus the valuation of another tells you absolutely nothing about what's going to happen in the future. So that's a very poor guide. What does tell you about what's going to happen in the future is which countries surprise on the upside in terms of economic growth and which countries disappoint on the upside in terms of economic growth. That is the single most powerful predictor of returns over the next 3 to 5 years. And I think in that regard, as far as India is concerned, I agree, with the general view that India looks relatively better compared to everybody else. But as you know, that my favorite line, even from the book, which we'll speak about in a bit, is the fact this is a country that's consistently disappointed the optimists
and the pessimists.
And that's something which I would keep in perspective as far as India is concerned, that we all tend to get very carried away by our own talk here. There's an echo chamber where everyone says the same thing and everyone comes here and says the same thing, our fundamentals are fine and stuff. And I'm just a bit concerned.
Is it overhyped today?
Well, I'd say expectations are very high out of India. So, for example, if you look at the best performing markets today in the world this year, they're like Russia, Brazil, because expectations were so low, they were beaten down and they've risen. On India, it's the weight of expectations, which is something which is, I think, sitting on this market a bit heavily.
Who are we likely to disappoint today, the optimist or the pessimist?
Well, if anything, at this stage, I guess it's got to be the optimist, just given how optimist people are about this country. But I still feel that on a relative basis, from a fundamental basis, on a 3 to 5 year, India does look relatively better. That's what the rules of the road framework tries to say. But for now, I'd say that we should be a bit careful about the fact that expectations are very high.
Okay. Richard, let me also just ask you very quickly about what you foresee now as far as capital flows into emerging markets in the context of the Brexit. Do you see it impacting significantly capital flows, especially into countries like India?
Yeah, I think that we should just, in general, expect lower capital flow. That's a fallout of deglobalization. And the biggest contributor to lower capital flows today is that cross-border bank flows have reduced significantly. So you have much less bank lending going on between borders. Like European banks do not want to raise emerging market exposure or India exposure, not because they have any view on that, just because they've turned much more inward because there are problems at home. Same thing with even many American banks. So these banks which lent so profusely to emerging markets now are not keen to lend that much. That's just a reality. Having said that, one place where we have seen a pickup in flows in India is FDI flows. That FDI flows in India have really picked up. In fact, as a share of GDP now, India is among the highest recipients of FDI flows in the world. So flows are changing. The nature of flows is changing, but in general, India, I think, is likely to receive less capital flows in total because cross-border bank lending has collapsed across the world, and that was the largest share of cross-border capital flows last decade.
Okay, that's Ruchir Sharma on the fate of flows into the country, and you can catch more of that conversation at 10:30 p.m. tonight only on CNBC TV 18.